All right, welcome to the runningrestaurants.com podcast, where we bring you the tips, tools, and techniques you need to know to make your restaurant more profitable and successful. I'm your host, Jamie Oikel, and today I'm with Ann Gannon, principal at the Largo Group. Welcome, Ann. Good morning.
Good morning. Thank you so much for having me. I'm excited to be here.
Absolutely. So Ann's got a great story, and we're going to get into some of that. And she's been very, very helpful to restaurants throughout this COVID pandemic. So why don't you tell me briefly what the Largo Group is and what you guys have been up to? What do you got?
Yeah, so we are a innovative accounting firm that specializes in really small business accounting, but definitely a specialty with restaurants. And so I've been the principal. We started 5 years ago. I've been in public accounting almost 20 years, but I used to work at a big firm. Basically, saw very quickly that the entrepreneur or the business owner is underserved at a lot of accounting firms, because by the time you get to doing your tax return, you're far down the road from anything that those accountants are actually looking at. So it's very hard to give any sort of advice or strategy or even have a conversation, because you're looking at things that are 12 months ago. So you're not looking at what's happening today. So the business model really is that our goal is to be involved with you every week, every month, so that we know what's happening right now and can give, our strategy, our advice based on current information, so we can actually make a difference before we get to the tax return. When COVID hit, it was sort of an eye-opener, obviously, for everybody, but hugely for us, because, we were so involved with hospitality that most of our clients are in some way connected to the hospitality industry. So right away, actually partnered with David Scott Peters, and we started a cash flow mastermind session, which we thought was going to be 1 week. And it was amazing the response that it had, because all of a sudden you had, over 1,000 people that had joined the group, that were reaching out. And for the first 7 weeks of the pandemic, it really was the lifeline, like not just for the people on it, but I think David and I myself, just to kind of say, all right, what's going on this week? What do we know? Like, what do we think you should do? Because it was such a crazy time. And, from that, I think really what became our mission for the last year, to just help in any way that we could. So anytime we get information, we try to post it, we try to, put an update, because, restaurant owners have a lot on their plate in any year, but what's been thrown at them in 2020 is just, it's an insane amount to deal with. So our goal really has been just, let's all boots on the ground, get through this together and, come out on the other side better for it.
Yeah, I tell you what, the information was coming out hot and heavy when it first came out. It was overwhelming for everybody, for sure, and even now it still is. There's so much to try to keep track of, and David is great. I go back years and years with David and David Scott Peters and all his knowledge, and he's great with how he brings that into effect for his clients and for folks in general. Now. We're going to get into some of the PPP stuff and what people need to know, but you really didn't hint at it. Her background goes a little bit more of a windy path than she gave you there, and even because we were talking right before we started the call about some of where we lived and so forth and so forth. But we talked about the golf angle. So you were a big golfer, and that kind of weaved you through, and eventually you landed on the CPA. So tell us that before we dig in.
Yeah, so growing up, my dream was always to be a professional golfer. I just love golf. I'm Scottish is my heritage, and it just kind of fits. I think, the Scottish way of looking at things is just, you're kind of out there, striving to be your best every day. So it was always a dream. When I got out after college, I played high-level amateur golf, competitive golf, had a very good career as an amateur. And then when I turned pro, what I quickly realized is I hated playing for money. It's really an interesting mind shift, and I'm not, kind of that gambler mentality. So pretty much the first tournament, I'm like, oh, this is really kind of going to be a struggle. So after the first year of it, I really looked at it and said, I just don't see myself wanting to be a professional golfer for the rest of my life. So where does that lead me? But it really was a time to kind of look back and say, what I loved in the journey of getting to professional golf was the people I met along the way, and that I had, traveled the country, going to all these different towns, meeting the golf pros and meeting the restaurant managers. And those are the people that I loved. And, even in golf, you stay in private housing, and I would be staying with people who owned the local restaurant and were the entrepreneur of the town that happened to be a member at the club. And those are the people that I, really wanted to work with. So how does that happen? I went, thinking, well, maybe it's accountants. Some of the people I had stayed with along the way had been accountants. So I'd kind of, drawn on their knowledge. But when I got to the bigger firm, I realized, you have such a distance between you when you're at a big firm, because you really can't just sit down with an entrepreneur and have an open conversation. There's just a lot of stuff in between. And in order for me to really want to serve those people, you have to find a way to where they can pick up the phone and really call you and talk to you as a person. And it's not just part of this wheel in this big machine. And so that was really where I realized, like, to do this right, I want to kind of reinvent the way accounting works for the entrepreneur or the business owner, so that it is something that values them, and it's not just valuing the accountant at the end of the day.
Yeah, what a fun journey to travel and play golf and enjoy it. But yeah, I can see that crazy pressure side of putting for dough at the end.
It's not fun. No,
it's hard. So we literally could go in a whole bunch of directions with your expertise and what you help restaurants with, and I'm open to wherever the conversation goes here for the next little bit. But why don't we start with what folks need to know about the current state of the stimulus and PPP? What's going on there right now?
Yeah, so I really think there's a lot to take advantage of for business owners. PPP, the first round, I wish they had done this differently, because I feel like what made it so stressful is just the uncertainty. But, finally on December 28th, when they passed the next round of stimulus, they did answer a lot of the questions that had just been plaguing everybody all of 2020. And the big one was that PPP is not taxable. So what that means is you really are going to have the case where what shows up on your tax return is less than the dollars that were in your bank account and by this PPP amount. So it's the best possible outcome for the restaurant owner or business owner, is just that you now have a tax return that's going to show potentially even a loss, but you actually did have more dollars than that. It just isn't going to be a taxable event. So that was huge. I think knowing the rules for round 2 of PPP is great. So the second round of PPP is there to, for anyone who had less than a 20 or 25% drop in sales for any quarter of 2020. So the one thing I tell people here is really make sure that you are comparing apples to apples, because a lot of things changed in 19 and 20. So the big thing for restaurants is delivery fees. So what you really want to make sure when you pull your, QuickBooks report for, most of our clients, it's either the second quarter or the fourth quarter, depending on their business, but those seem to be the 2 quarters that most people are looking at. But if you're looking at quarter 2 and you're looking at your sales, you want to make sure that 2020 is obviously correct, but you also want to make sure that 2019 includes any sales for delivery services or catering events, because, in a typical year in a restaurant, we're taking your point of sale system, but we might be just doing cash deposits. We might not really be paying attention to the timing of when the revenue gets recorded, because it's really something you do at the end of the year. So you really want to make sure that you're not looking at an understated 2019 sales and then comparing it to 2020. And the big one for us is the delivery services, that a lot of the point of sale systems in 2019 weren't recording the delivery service sales, which means if you're using just your QuickBooks report or just even your point of sale system, you could be missing some sales in 19. So I think that's the big tip for, round 2 of PPP, is we just want to make sure that we're looking at the right number for revenue.
Let's kind of go back in time to 11 months ago. I always think about St. Patrick's Day as the really hammer last year. It was like hey guys, don't go party because this thing's going to spread. And so that's always the date that sticks out. And we are almost, we're sitting here early Feb. And so that's 11 months. So we've been a year in this. That first round, I think, would be easy to agree that it was a disaster for a lot of folks in terms of how do I sign up? I didn't get it. You got it. They got it. A lot of people did great in terms of getting their paperwork in. You must have seen a lot of those frustrations. How did you counsel people through that? I guess, and more importantly, how does it translate to now? I mean, are people still struggling to get what they feel they should get? What's happening?
Yeah, I mean, I think it was eye-opening to people in round 1 if you had a relationship with your bank.
Mm.
because, as a business owner, you're kind of pre-COVID, we're like, it doesn't really matter. I want to pick the bank that, my server can go deposit the cash at the end of the night. But you really weren't, for a lot of people who had started businesses, in the last 5 or 10 years, you really weren't thinking of this relationship that you needed at your bank. And then all of a sudden, when PPP came, if you didn't have a person to contact, it was eye-opening to say, well, wait a minute, this is the worst time of my business's life. And now I don't even have a person who will pick up the phone. So I think it's going to, in the long term, change the expectation of a business owner for their bank. Because if your bank didn't deliver in PPP, then you're not going to forget that anytime soon. And I think, most people got the money eventually for round one, but you're also seeing that again with round two, because it does seem to be taking a long time. A lot of it is just the banks have built-in requirements now. I mean, we've heard of, people who potentially there was fraud in round one. So the banks really have to be as careful as they can, but you're still seeing some of the larger banks, the banks that don't have the person to call, that it's just taking more time than the people who have a banker they know, who they can call, and the banker can help them. So I feel like that's the lesson, maybe not today, but I think the people who felt underserved by their bank, it might be an eye-opener to say, I want to go find a banker who's going to have a relationship with me.
Yeah, I call it, when we did calls right away too back then, and you already used the phrase eye-opening, and I think it was incredibly eye-opening for people that no one would have ever, because it hasn't happened, right? Where businesses just shut down. The government said, you guys have to close it, you just have to do it. And everyone's like, what? And then of course they had to follow the regulations to a large extent. And so very quickly restaurants learned, oh my gosh, I can't operate if I'm closed for a day, for a week, like for a month. Like I have no backstop. I have no plan for that. I have no savings for that. And so they went through just dramatic learnings about that, because before, if you go back 24 months, it was what I call easy times. Like everything was flowing, right? It was easy. I mean, people were going out to restaurants, spending money like crazy. No challenges to I don't mean no challenges to run restaurants, but it was as good as it gets. Like things were flowing pretty well. And then, put the brakes on, and we're in a whole different situation. What were some of those early conversations with people, like the panic level? Like, I don't have cash, I can't pay the rent, I don't know how to do with, my servers and my staff I've had for 5 years. Do I have to let everybody go? Like a lot of tough conversations, I'm guessing.
Yeah, I mean, it was, I think, the funny thing is we were talking, cash flow before COVID, but nobody really cared because things were so good. It was like, yeah, sales are good. I care about my top line. I care about my next location. I'll get to cash flow. And I think very quickly, in that last 2 weeks of March, first week of April, I mean, it was scary because you had people who just closed, who said, I'm not spending another dime until I get some sort of relief from the government. I mean, there was this, mad rush to get every program they could get. But I think the lesson in that, at least from my perspective, is that so many times when things were good, the last person taken care of was the owner. They took what was left in the bank, or if they took anything at all. I mean, we had so many clients who really used the operating account as their own personal account too, right? Well, I'm going to get taxed on the profits anyway, so I'm just going to use this for my groceries and use this for my trips, and I'll figure it out at the end of the day. And they didn't have their own separate savings or their own separate nest egg outside of this, valuable asset, which was their business. And then all of a sudden, when that went away, it's like, well, wait a minute, I don't have anything else besides this business. So I really feel like once we get through, COVID and then we're on the other side, I mean, the lesson really is that every month, the restaurant owner should take care of themselves too, right? Have a savings account, have a cash reserve, so that if anything that happens in the business, the business is a valuable asset, but it's not your only asset.
Yeah, I mean, 100%, right? So what I think we saw, a year ago, I'm not rocket science, I'm not telling anything that people don't know, is we saw the inherent flaw of the restaurant business surviving on traditional 7, 12, if you're lucky, 15% profit margins. That is unsustainable if there's a pause or a hiccup in your business. And we already knew that the restaurant industry was kind of thin, right? And kind of skating on on oblivion. And so it really was a hard lesson to learn that, oh, we're really not structured for success. How have you, and kind of, we'll talk a little bit how you're building classes and learnings and stuff, but how have you kind of thought about restructuring restaurants for more success when we get out of this, so they can be profitable and, you know, pull 20% and have a future that is more sustainable and so forth? There's a lot of systematic hurdles to that. How do you think about it?
Well, I really think that it does come down to being aware of the cash flow every week. So really what we've tried to transition into during COVID is bring cash flow to the table every week. So if we're going to look at a weekly P&L, so with our clients, we send them, you know, every week a weekly report so they can see how the business does. But beyond that, literally taking it to, let's check the cash in the bank this week. And is it more than what you had last week? And from that point, you know, should I move out $1,000 into my personal checking account this week? Should I take some of those profits now? And if I'm not going to, you know, maybe digging into why, because the other part of it is, you know, it's great to look at the budget and it's great to look at the P&L, but what are the other thing that's happening? Because a lot of things, you know, that were happening in 19 is that expansion. You know, you take the profits from your successful restaurant and you throw it all into the next restaurant. Yeah. Right. And it's like, oh, that's great. And I can get a loan here and I can go build this and yay. That's but right. All of a sudden you've just thrown $600,000, $700,000 into this what if, right? And the profitable one is just, you know, churning as hard as it can to sustain this growth cycle. And that's not anything against the growth cycle, but I do think we have to be strategic of, you know, this one that's profitable, we maybe want to save a portion of that or move a little bit over and, you know, have a reserve. So, you know, yes, it's great to grow, but we're not throwing all of our profits in for the sake of this what if.
Yeah. Yeah, everybody wants to grow. As soon as you have a little success, everyone asks, well, hey, when's your next one coming? When's that? Where are you guys going to build next? Right. And they want to expand, which is a natural tendency. And you brought it up. I had a question listed here that I did want to get to. So let's kind of do it now because you touched on it. What restaurants should be looking at? You talked about a cash flow statement, P&L, other things. So the way I had it written out, and so you can answer it however you want, but I was going to ask, you know, what should they be looking at on a daily basis, weekly basis, monthly basis, et cetera? What are those key information points to really keep track of what's going on?
Right. So I definitely think, you know, a P&L, even if it's incomplete on a weekly basis, if you know, like, well, you know, I didn't get this invoice in, that's okay. I think what we really want to do as any business owner, especially restaurant owner, is consistently set up the key things for your business. So, you know, and really make sure that every week you're looking at, you know, the same set of pieces of information. So if I'm looking at my P&L, I'm going to look at it every Monday. And then as part of that, I also want to look at my bank balance. And you know, I think what happens is there's a lot of fear, right? Especially now, because what's funny is you have people who have more cash than they would have ever imagined they'd have in 19, but there's so much more fear because it's never going to feel like enough anymore because you saw what happened in 2020. So I think the consistency of, okay, I looked at my bank balance today and it has 20,000 and last week it had 18,000. Like that inherently will help get rid of some of that fear because I think it's unrealistic to think the fear is going to go away. But the more we can consistently look at our performance, oh, look, my sales went up by $500 this week. And I can consistently look at my bank balance and, oh, look, my bank balance went up by $500. You know, that will build into getting rid of some of this fear that is just going to live with us for a long time as entrepreneurs.
Yeah, I agree, right? We're all going to be more careful for quite a while. And I want to ask you, because you kind of touched on it, you talked about invoicing thing and so forth. And there's a lot of tools now that there wasn't 5 years ago, 10 years ago, 20 years ago, that operators can use to be much more efficient. And they're all very affordable. You know, things that used to cost big businesses, you know, millions of dollars to create plans for. There's cloud-based systems. How have you seen the technology piece really, and mobile stuff, apps, delivery services? How have you seen all this technology kind of just change the landscape for how efficient restaurants can be?
Well, I think that's true. I mean, I think that there's a lot out there in terms of software. There's a lot out there in terms of, you know, invoicing, being able to read the invoices and gather the data. I really think the key is the owner being open to technology, because it doesn't have to be done the same way it was done 10 years ago. So, and the other thing I think in COVID that people realized is you have to have a software that's relatively automated, that there's some softwares out there where it relies on your manager to do a certain task or to import or input things, or, and I think the lesson of COVID is, as much as you can get it to work on its own, that's going to benefit your team, because, you may have a time where your manager is not going to have time to put the information in. So really making sure that the software is relatively self-sufficient. I mean, you still need to review and you still need to check it, but it shouldn't be something that it takes your manager 20 hours a week to do, because that's just a lot of time in a software where really the manager needs to be managing, right? So I do think that software has come a long way, and some sort of automation is very important in software. And then the other piece is that your team buys into it, because it doesn't do any good if the team isn't aware of the information that's in the software. So just, I think having it, again, part of that weekly checklist should be, the team looking at the data, because the team knows if it's right or not. But if no one's looking at it, garbage in, garbage out. So we really have to, own it, that if it's not right, we fix it. So we get it as accurate as we can. Because again, the software isn't going to do everything for us. We want it to make our lives easier, but we also want it to be like a member of our team, right? So we have to manage it just like we do our employees.
So funny. I was what my little note here is like the garbage in, garbage out, right? I just wrote that right before you said it, because it happens. You can put whatever you want in, but if it doesn't go in the right way, it doesn't come out the right way, and you're just guessing on wrong numbers and so forth. But the data is certainly available. There's so much different data that can plug into the system. So that is the good news. But yes, it has to be consistent, and it has to be correct. I know you would have gotten this conversation. This is Ann. Listen, we can't do it anymore. We're closing up shop. How do those calls look? Do some of them sway back and they have found success, and some obviously probably closed along the way? What have you seen?
Yeah, I mean, I guess I come to this from, obviously a tax background. So my thought on those calls was to go slow with that. I mean, I think at the beginning, there were definitely people who just said, I'm done, I'm walking away. But from a tax perspective, my biggest fear in that was that there's some unintended consequences. Did you have a personal guarantee on a lease, or, loans that were taken out for a build out that you're going to have to pay back anyway? So while it seemed like the answer, a lot of our clients and the people that I talked to, I really tried to get them to look at, where can you go from here? Because even though the decisions aren't easy, and it's not an easy road to crawl back, it's probably worth screaming to your landlord that you can't pay the rent versus just closing because you can't pay the rent. So our thought really was, on some level, every cost is controllable, because you have to write that check. So really what we tried to do was walk through everything you owe, but also looking at, like I said, the loans, the long-term investments, money that you've already put in, and not from a place of regret or, we can't go back, and who would have ever thought 2020 would come, but there is such an inherent value into any business. And, the value really is there until you sell it, and to just walk away, you're giving up that upside that could come in the future. So, what we really try to do was just really think outside the box with a lot of our clients. And some of them do great things, like find a, city project where they could do meals, or, other sources of revenue they would have never thought of. But I really think that what got lost, at least at the beginning in the whole, close, stay open, is the idea that you've already invested, hundreds of thousands of dollars into this asset. And it might not feel like anything today, but on the other side of this, there is going to be a time where there's less competition. And we are already seeing sort of that with some of our clients, where there's this vacuum. So there is going to be a time where things come back at some point. And that's where we've just really tried to be strategic to say, don't even look at your P&L if you don't want to for 2020, right? It's ugly. We know it's ugly, but you're playing for the long game, right? And we have clients who've had this conversation where our goal is really to plan for 5 years from now, where this gets back to, and what your business or your, locations look like at that point, not necessarily today.
Yeah, a lot of good things you just said there for people taking the long-term perspective, and the competition perspective is interesting. Again, if you go back 12 months, probably too many operators in the marketplace, too much competition. Some people didn't belong there. Those people will get culled out of the marketplace or have. And so when it does get back to normal, you're going to have fewer restaurants operating than in the past. And the ones doing it have a chance to be more successful, and then they can do things right and they can build on that. So that's a semi-positive of the thing. If you were well structured and set up and ready to take that leap of faith to wait there. But in between, I'm sure it was painful. Did you see a lot of, or any really interesting tales about the negotiation part? Like you just said, you go to the landlord and they gave you a good break, or you went to the bank and they gave you a good break. Any kind of interesting stories that came up for you?
Yeah, I mean, I think what was interesting is the way people worked with their landlords to, kind of make it somewhat of a win on both sides. We did have, quite a few clients who were able to structure very unique deals with their landlord. Like, a few had the landlord just added to months at the end of the lease. So, we're not going to forget that you haven't paid for 6 months, but really going to add it to, 3 years from now, an extension on the lease. So there were some that were willing to do that. A lot of them did, percentage of profits for the next year. So really became just more of sort of a collaborative thing, because a lot of this also just depended on where you were. I mean, we have clients who, if you're in the cities, downtown Boston, downtown Philly, I mean, there was less you could do because there's just fewer people. And if you're in like a suburban area, you have people at home, so you do have somewhat of a captive audience. So I think, what we saw was really people, working with any vendor, any, debt that they had, and the ones that were the squeaky wheels made it through, right? Like they just didn't take no for an answer. And so, right. And it was interesting to see like how creative they got. But I think, by and large, what we saw was just the people that were able to just sit line by line, vendor by vendor, and just start calling were the ones that really made a difference in what they had to pay during 2020.
Yeah, gotcha. You said something that I want to pick up on about other services. So when people had to get creative, it became a lot of takeout. It became pivot to that, like meal delivery, just anything they could think of to generate revenue. And I remember us talking early on that I said, if a lot of people if you went a year ago, they didn't know how to do takeout and delivery. By April, they did, right? Because they had to learn quickly. And so one of the things we said, well, good, take those learnings that you are been forced to do and never forget that, because in the future, 2 years hence, hopefully delivery is still a good chunk of your business. Instead of 2%, it's a consistent 20%, or whatever. The numbers obviously change for everybody, but like those ways of making money that you never thought you had to do before, don't forget how to do that when things get back to normal. Have you kind of, I imagine, had those conversations? What do you think?
Well, definitely. And I think inherently as entrepreneurs and business owners, we tend to not give ourselves enough credit a lot of times. But this conversation has actually come up quite a bit. We've been working through with our clients this employee retention tax credit. And it's a very good credit. Anyone who's interested, should check out our website on it. But basically the rule of the credit is to get the credit, which ends up to be, $5,000 per employee, basically, is you have to prove that either your business was impacted by COVID or that you had a 50% reduction in 2020. So most of the people that we've worked on is number one. And it's so funny because so quickly the entrepreneur goes to revenue. Well, my sales are only down 10%. So I don't really know if I, could get this credit. And really you say, well, yeah, but like, look at all of the creative ways that you went to get revenue last year, whether it was a meal program or it was building a delivery or it was building a tent outside. But inherently, I mean, your business was, impacted way more than 10%. You just were the entrepreneur of the lifetime who made it work and got this revenue. So I think you're 100% right to say, you really want to look at all those different avenues and, not dwell on 2020 of the what if, but it's true. Like if you had worked as hard as you did in 2020 in any other year, you probably would have had, 20%, 25% top line growth. It's just that you had to make it work. But, there's no reason to think that in 2021, that can't be these additional revenue streams that stay with you. So I agree with you 100%. And I think it is looking back, a point to give yourself credit because, so many people were so creative just to get their business to work in 2020. And that's the creativity that'll be with you forever.
Yeah, and I absolutely, and I hope that does stay, and they don't get complacent again in the future. I do. We'll start to wrap up, but I did want to ask you because you mentioned delivery earlier, and you can talk to restaurants all over the country. Everyone's got a different story. Oh, the fees, this, or I love that, or there's two sides of the coin, and I don't think there's a great consistent answer with all the mobile apps, and you can do it yourself. But what have you seen client wise, fee wise? Is it settling into X percentage of sales to do a delivery? What are you kind of seeing as a trend?
What I think the trend is just being more aware of your customer's behavior pattern with delivery service. So, I think one thing that's positive is that people have really seen that customers don't mind spending more.
Mm-hmm.
So, 19, in 2019, people would have I don't want to raise prices in delivery services, or, I charge $9.99 for a pizza. I have to keep the $9.99 pizza or they'll get mad. I think that proved to not be the case, that people who are ordering on the apps really aren't paying attention. And that's not to say you should gouge, but at the same time, if it costs you 20%, it's very common now to just see I've added that cost on to that to that meal, and that's what it is. And I think, customers are aware of it. The thing now that you're seeing is, because it's such a larger portion of the collective revenue, is what I've added enough? Because it still eats away at the bottom line, because you're giving up 20% of every sale that comes in. So now what we're really seeing is, okay, we're through the craziness. We had what we had, but the delivery services aren't going away. So let's really make sure that we're tracking what we spend in delivery, almost like it's just another of our controllable costs. So, here's my delivery cost from last week. What is it this week? Just to make sure that the bottom line is still working with that fee, and how large that fee has become.
Yeah, I mean, and a very good point. I'll just talk as a consumer for a second, and I'll echo your point as being accurate. Yeah, 2 years ago, I would have said, oh, that's more than you charge when I walk into your restaurant. You can't do that. But now, absolutely, I see the little fee added up, or I know that it's a little bit more, and it becomes like, I don't care. I just want the food delivered to my house, and
Right.
And I think I'm not different from anyone else in that regard, right? So we just want our food and delivered. So yeah, that's an interesting mindset that I don't think you could have convinced anybody of 12 months ago, and so that has been an interesting change. That's the majority of my notes. I do want to hit that you guys are doing, whether it's classes, or I think a Largo Group Academy or class. What are you doing in that education front?
So really, education's always been part of our goal, to not just, kind of hand a client a tax return, but really make sure that they understand the accounting rules, because, it's the language of business, but it's hard to understand, or take time to understand, when you're trying to run a restaurant as well. But during COVID, what we really tried to do was put up, some online courses where people who did all of a sudden have more time, or were kind of trying to reinvent the way they've done things, learning accounting is very important, and that's an integral piece of that. So, we've really tried to just kind of hone in on things that the entrepreneur needs to know. So whether it's, learning fundamentals of accounting, I actually used to teach accounting at the collegiate level. So I kind of reworked some of my accounting courses, because who has time to take an accounting course? Probably not if you're running a business, but at least you might have a half an hour to kind of sit down and think about a balance sheet and what that is, and cash flow. What is that? So, I think that's really our goal, is to always have that as part of our offering, so that if you want to learn more, we've given you the resources to do that as well.
Good. And that's all it's on the website. It's other places where
yeah. So it's on our website. We do have a few of our lectures on YouTube. So our accounting fundamentals is on YouTube. Okay. We do have our courses as part of our Largo Academy, and yeah.
Good. Yeah. As long as you can make it more interesting than a boring college lecture, I think you'll keep them tuned in, really, really hone. And I'm sure that's what you had, that mindset of, hey, I used to teach it like this, but I know you don't want to hear all that. Here's what you actually 100% need to know right now in 30 minutes.
Exactly.
Financial accounting 101 for your restaurant. So, all right, good. As we close, hit them with the website, your social, anything else you got? What do you got?
Yeah, so definitely check out our website. I would say for business owners, the key thing for tax planning right now is the employee retention tax credit. If you haven't looked at it yet, please do. It's amazing dollars that they haven't made it easy. It's the anti-PPP, which was easy to do. This one is a beast, but it's also something that's very valuable for especially restaurants that were impacted by COVID. So I've definitely looked at that because it's something that's there for 2020 and 2021. It's on our website. You can click for more information. We will help you figure out if it is something that it's applicable to you. And then the other one is, I think just staying aware of tax planning for 2021, because obviously, hopefully it's a better year. Hopefully we've learned a lot in 2020. So my 2 tips would be, ERTC and then just overall tax planning, that let's, really make sure that the owner is taken care of as well as we get out of this pandemic.
Yeah, awesome. And really, really terrific stuff. I appreciate you being with us. Folks, that was Ann Gannon of the Largo Group. You can find them on the web at thelargogroup.com. So thelargogroup.com. We'll get you there, and where she has all that information as well. And you can see that, as well as some videos and so forth. So for more great restaurant marketing, operations, service, and people tips, stay tuned to us here at runningrestaurants.com. We'll see you next time. Thanks so much.
Thank you so much.